We preview SOFI ahead of its quarterly earnings release. Joining us now, George Tillis, senior markets correspondent, as he does on Under 30 here to close out the show. Now, George, I was reading something on Bloomberg, and they talk about this company as the one-stop shop that's winning the young affluent. Now, apparently, I'm neither in that crowd of young or affluent or the combo of the two, because I can comfortably say, to my knowledge, I don't know a single person who uses this company.
Well, I mean, that's the thing. I just look at, banking and financial services as sort of ubiquitous. And to me, it really doesn't matter which company you utilize, as long as, of course, they're FDIC insured and they're under the same regulatory authorities, which they are. So, ideally speaking, that's what SoFi's got going for it. It's all about brand marketing and, of course, appealing to, everything from digital payments and digital banking. Other products that they offer include insurance and brokerage services. So, this is essentially what they're trying to offer as sort of an all-encompassed financial services company for those who don't want the traditional brick and mortar types of services that banks offer. So I think, again, that's something that's not necessarily unique to SoFi, but nonetheless, again, they are increasing the number of active customers on their business or using their apps. Because if you look at last quarter, it actually grew by 47% year over year. They added about 717,000 more customers, and that's a good thing. But we talked about this one in the past, and if you look at the estimates for earnings, this is what it comes down to: is one, are they growing their sales, and two, are they growing their earnings? And if you look at the sales numbers with additional customers that have been added, their estimates are expected to increase by 29%, about 571 million. But at the same time, the adjusted profits are expected to be zero or break even. And again, that's going to be a challenge, especially when you're trying to grow your business. While at the same time, just look at the regional banks going back to the first quarter and maybe in the second quarter of last year where they have struggled. They haven't recovered the majority of those losses since then. So you got to think about these businesses like SoFi that are growth businesses, but they're growing essentially amongst a very large competitive landscape. And I think that's still a structural challenge for the company.
Yeah, George, I completely agree. And I think that what this company was riding on going into this year was the fact that it was really, really set to benefit from some of these resumption of student loan payments. And that tone seems like it's shifted a little bit here. I think it's too early in the year, obviously, to say that like they couldn't still be beneficiaries, but was just that some of this hype maybe a little bit overdone now.
That's the thing. Yeah, I think early on, obviously, there was a big move when the student loan pause was reversed. And of course, payments resumed. I think it was back in October of last year. But at the same time, as the company's generating more visible revenue streams, from what I understand, default rates and repayment rates are actually not the way they were prior to the repayment pause being removed because of people struggling to pay their student loans. So that, again, might be a challenge for SoFi. But, every time, this company makes progress from the standpoint of the price action, the progress sort of gets erased because of the fact that if you just look at figures, from the standpoint of profitability, the company essentially is lost about 429 million last year on about 1.9 billion dollars in sales. So they have to finance that hole. So my point is that every time the company makes progress in terms of price, because they're getting closer to break even. And again, if you look at the estimates for 2024, they're expected to print a slight profit for the full year. That progress sort of gets squashed because of share issuances and share dilution. So that's something you have to keep in mind that, yeah, it makes progress, but then they issue more shares, that progress gets erased, and it's almost like you have to start over again. But nonetheless, the stock is still higher, I think, by 20 or 30% this last year.
Hey, the market's also pricing in that once they do hit that break-even point, they're not looking back. How critical of a point in time is this for SoFi?
It is very critical, I think. I think if they fix their student loan portfolio, they get that right size, they demonstrate that they're cutting operating expenses, and I think that's going to be a big thing to keep in mind for this quarter upcoming, because operating expenses last year were 2.1 billion, and they only generated 1.9 billion in sales. So you can actually see that operating expenses need to come in line. So this is the quarter to actually demonstrate that, especially with the estimates being break even for the quarter and for 2024 full year. They are expecting, at the very least, from what I see, 6 cents of total profits on an adjusted basis.